Ladies and gentlemen, time flies. We are back with Egon von Greyerz for our monthly interview. Egon, glad to see you. How are you?
I'm very well, thank you. In spite of all the problems in the world, and now this being in Europe and trying now to travel through Europe with Corona, every country has a different rule. I mean, the EU is not cooperating at all, and many countries, like take Germany, totally bans any Brit. No Brit can come in, and I've spent some time in the UK on and off. And if you come from Britain, you can't go anywhere in Germany. You can go to Holland, no problem, or you can go to France with a test, but not to Germany. So it's a pain in the neck. I mean, they're clearly doing this to control us all, and maybe also as a punishment to the Brits who, because of Brexit. I'm fine. You just have to, obviously, you have to learn to live with the rules and do whatever you can to get through all of these barriers. But it's becoming very difficult. We've had a year now, and we don't know how long it's going to take. And as you also have mentioned, they might continue this forever, on and off, on with mask, off with mask, in with quarantine, out with quarantine, etc. So anyway, we shall overcome one way or another.
We will overcome, Egon, definitely.
Yeah, absolutely. Yeah.
Today we have interesting topics to cover as always. First of all, we have a little talk about the crypto madness that happened, that came from China. Then we talk about the CPI numbers, all prices rising, and that's the program for today. Egon, let's start with crypto. We saw, in my opinion, how quickly this can come down, and it shows a clear difference to the precious metals.
Yes, of course, the early crypto investors were very clever. They saw something that had potential. If they still have the key, of course, a lot of them lost the key. But I calculated that someone who bought Bitcoin very early, one of the first prices was 8 cents. If you put $1,000 when it was 8 cents, you would have had $800 million today. So there are some people who got in early, and so they clearly believe in this. And now it's just like the stock market that you buy on dips. Every time it goes down, people believe now that it's time to buy again. Of course, we went up to, earlier, a couple of years ago, it went up to 20,000, and then it went down to 3,000, and then up to 64,000. And then in a few days, it went down to 30,000. So it's halved in a matter of days. And that shows you the volatility, and that shows you that it is not for the faint-hearted, or as we say in English, it's not for widows and orphans. But it's been a fabulous investment for some. But I saw people on the internet who bought at 64,000, and they said nobody told us this, that it could halve like this overnight. Nobody told us. People don't see that. This is a great speculation for people who can afford to lose all of the money. It is not a long-term investment, in my view, and it's very dangerous for normal people, as you just saw, losing half of it. For the people who bought at $1 or $10 or whatever, they don't care. But you do still care. Let's say that somebody who bought a lot of Bitcoins early on would have had 100 million 10 days ago, and today they only have 50 million. That's only paper money, but still they feel very poor. I think it might be over the run, but I don't know, and I won't touch Bitcoin because it's not wealth preservation. It's not it is a speculative asset, can still be spectacular, and I still hold by my view that says that Bitcoin can go to $1 million and it can go to zero. In my view, the risk is higher that it goes to zero because of governments basically banning it worldwide. And make it impossible to deal in it, even if you still can have it on a computer. If you can't buy anything for it, and if it's illegal to actually use it, then it will go to zero. So it's not a good risk. It might be a good speculation, but it's not wealth preservation like gold and silver.
In times of money destruction, Egon, we go to the precious metals, and the inflation is really gaining pace now. We saw, I think 2 weeks ago, CPI numbers from the USA. I have a graphic prepared. Here we got it, Egon. That's a graphic that dates back until 1990, and we are back to those high inflationary times now.
Yes, not unexpected, Jan. As you know, we've discussed the fact that tens of trillions have been printed, and the fact that if you take global debt has trebled since the late 1990s, and it's doubled since the great financial crisis 2006, and we're now near 300 trillion, and central banks have printed unlimited amounts of money, but of course that's only part of the printing. The biggest part of money printing is of course bank credit. Bank is increasing the amount of credit they give. And so we've seen the massive increase in this, but because of the fact that there has been no volatility, which means that this money doesn't turn over fast enough until now. It stayed with the banks, and the banks have lent it to big investors or invested it themselves. It's not gone out to the general economy, this money. Therefore, we haven't seen consumer price inflation until now. We've seen asset inflation, which is stocks and bonds, property, etc. We haven't seen consumer price inflation. That's starting to come now. Now the velocity of money is starting to increase. The money is being used several times, and that is what's going to create inflation. And as you say, the graph show we are up to 6% in consumer prices now in the US, and that's just the beginning, in my view. Inflation is going to increase now. The amount, this money that has been printed will have an effect. It always would have to. And of course, the biggest effect will also be when currencies fall. The dollar will fall dramatically, and that will create massive inflation in the US. That's still to come. Nobody sees that. Nobody realized it. The dollar has been, of course, crashing for 50 years since Nixon took the gold backing away. And it is down against gold, as we know, about 98% since 1971. That's the real purchasing power of the dollar. The strong dollar, as they call it. It's not a strong dollar. It's absolutely worthless currency. All currencies are, including the D-mark and the euro, but they're just now slightly stronger. Actually, the euro is in an uptrend against the dollar. But the dollar is extremely weak. In my view, the euro is a rubbish currency because it's an artificial currency, will not survive. Nevertheless, it looks on a relative basis very strong against the dollar. And it's up since last year from 108 to 122 euro against dollar. And that looks like it's going to continue. It means that the first currency is to fall now, which I always expected, is the dollar. And the euro will see the benefit of that. And we will see, therefore, in the US, inflation coming up significantly in the coming months and years.
And Egon, the funny thing is Goldman Sachs does not agree with you. They predict everything will be okay again. I found a graphic here. If something goes wrong, then it's wrong for the moment, but the future always looks rosy. Same here. They predict in April, May, the inflation would peak and then go down, even a deflationary episode, and then everything would be as usual.
But Goldman Sachs forecasts, I always question them for the simple reason that what they tell people is never what they do. They're trading. For example, when they say gold's going to go down, they will be long gold very often. And the same here. Now they say rates are going to go down. I'm sure that they will be positioned the other way, i.e. that rates will go up. So I don't trust them. Nevertheless, what they are saying is, which is partly true, I think, we're seeing now a ridiculous inflation due to some shortages, and we're seeing that in many areas now. That you take house prices, especially for the higher end of house prices in England, in Switzerland, Sweden, in America, they're booming. I don't know about Germany, but especially people moving out into the country from the cities. Prices are going up 20-30% of some of these houses. It's crazy. I heard, because Sweden is a country I visit, I heard boat prices now, pleasure boat prices are going up dramatically, and you can't find a boat this year, and second-hand prices are going up. In many countries, including the UK, price for puppies, for dogs, for little dogs, puppies, are going up substantially also. There is a short-term demand after COVID. That's temporary. That will not last because supply will catch up. But we're talking about long moves here on inflation. That will continue. When I'm talking about commodity prices and obviously fall of currencies, which will create inflation in itself also. So To me, it's absolutely clear that inflation is just starting, and it will get a lot worse. But it never goes in a straight line, so we might get a reaction to this first shortage of supply. But after that, I think that inflation will continue very strongly.
Egon, the inflation comes from two sides, as you just mentioned. The supply chains are still in danger or partly broken at least, and the money creation is in high pace. I found an article in the Smart Investor. I will also link this below in the video. And they write there also that the problem are the supply chains, and this can cause a chain reaction. So many prices are rising. They have a shortage of computer chips, wood, the prices are high, as you mentioned, the construction buildings. And then we just got numbers from the GDP, the gross domestic product of Germany, and it was shrinking by 1.8% while many prices are rising. Could this be the stagflation that we, or some of us, expected for a long time?
Well, that's what should happen, Jan. It's clear because of the massive money creation and printing, and everybody, even people who've been furloughed and been lost their job and or temporarily been paid without having to work, they have had money to spend, and all of these people have spent that money. And of course, the production has been less. Temporarily, we've seen very, very strong economy in many countries because of that. But the real effect of this is that, of course, there has to be a fall in GDP. Because this will have a long-term effect, this COVID. And it's also hitting the world anywhere at the time when the cycle is turning. Yes, I think that trend will continue, weak GDP, but high inflation. And the inflation will continue, as I just said, not because of shortage of supply, but of weak currencies. Weak currencies, that's what, as we know, hyperinflation in every case in the world in history that we've had hyperinflations all come from not higher demand, but or shortage of supplies come from collapsing currency. It always does, and that's what I expect this time too.
And many professional investors, we spoke about this in the past, Egon, and we were expecting this. They see the dark clouds on the horizon, and they have to protect the money of their investors, the institutions, for instance, pension funds. Recently, I found a tweet by Willem Middelkoop that a Dutch pension fund moved into gold. And I think this is an important step. Here is the tweet from Middelkoop, and I will put another article also in the description box. 5% of the assets under management of this pension funds from the DSM company, it's a big chemical company, I think, moved into gold until April. And I think this could be a sign for others to follow them. What do you think?
Yes, we have, Jan, been predicting this for quite a while, that pension funds and institutional investors would move into gold, physical gold, not because they have the same view about the risk of the financial system that we have, but it is a pure inflation protection that they're doing it for. And, we saw about 6 months ago, the Ohio Police and Fire Pension Fund also putting similar amount or similar percentage, I think, of their assets into gold. But of course, today, institutions, as I said, they're not worried about the system or the financial system because they have all their money in the system, basically. So they have some direct holdings of assets, but the majority is within a paper system, so they have all their assets in paper form. So therefore, they don't worry about putting the gold in any other form but paper either. So these pension funds most of them will buy ETFs. I haven't actually looked at DSM if they have indicated that they were going to buy actual physical gold in their own name. I doubt it because this is typical for pension funds to just buy an ETF. Nevertheless, they start with buying gold. And I think eventually a lot of pension funds will buy physical gold and not ETFs. They have to do it to protect their funds from inflation. That is coming. They all see it. And of course, 5% will be a lot. The world could not take, or the gold world could not take 5% investment into gold from all pension funds. there will not be enough gold. Even if they go up from where they are now, on average, there's 0.5% of gold invested or 0.5% of world financial assets invested in gold. Even if they went up to 1% or 1.5%, it wouldn't be enough gold. So the only way, as we have discussed before, Jan, the only way to satisfy the coming and guaranteed coming increased demand in gold will be through higher gold prices. So if a big pension fund says they're going to invest 100 million euros or dollars, which is very small for a pension fund. If they decide to invest 100 million into gold in a year's time or a couple of years' time or whatever, there won't be enough gold and the price will be much higher. So rather than getting, they would get now about 2.5 tons for $100 million. Or no, they will get, no, sorry, less. They get a bit over 1.5 tons today. So instead of getting 1.5 tons, they might get a ton or half a ton because the price will go up dramatically. Or in a few years, they might get 1/10 of a ton or 100 kilos because they still invest the same amount of money, but it's just that the gold price has gone then from $1,900 to $5,000 or $10,000. And that's what's going to happen. And that's the only way that the gold market can satisfy a high demand. And that's going to happen too. This is why we're going to see price adjustment of a magnitude in gold and silver that no one can believe today.
And as you mentioned, Egon, if the professionals, but not just them, move into the market, they have to choose carefully where to move in and to avoid the dangerous clauses that you find in many ETF prospects. And I will show one example of those from the ZKB, the Zürcher Kantonalbank. You know them well. A friend made me aware of this and I show it to our audience. Here we are, Egon. I read to our audience, I have translated this already, this point 5. This is the key point. I read it in English. Instead of a cash payout, investors may also request a payout in physical silver, in brackets payout in kind. For further details, please refer to paragraph 17, item 7 below. This is subject to monetary policy or other official measures that prohibit the delivery of physical silver or make it so difficult that the custodian bank cannot reasonably be expected to make a payment in kind. You have to choose carefully because in cases or in times of financial stress, they might not give you your metal.
No, of course not. You know that we've discussed it. Yeah, most ETFs don't have the gold or the silver that they say they have. I know ZKB, they say they have it. I don't know. But as they indicate here, when there's stress in the market, they won't get it. And we see already the Perth Mint. You know, we see every day articles about the Perth Mint that has issued a lot of gold and silver certificates to investors, which is paper certificates. They can't deliver now. And that's a mint that is owned by the West Australian government. This is going to happen everywhere. Most ETFs like GLD, they don't have the gold. They borrowed it from central banks via the custodian, which is JP Morgan or one of the big bullion banks. Gold that they borrow has been double counted and lent several times by the bullion banks and the central bank. So, you know, don't trust any form of gold that you don't hold directly in your own name and that you can have direct access to yourself personally, but still stored in a safe vault somewhere, whether it's like with us in Switzerland or another safe vault in the world. So don't trust any form of gold that involves holding just a piece of paper saying that you can get gold. If you're lucky, I would add, if you're lucky.
Egon, that was a good final statement. I thank you for today. Big changes are ahead. I can only advise our audience to take precautions, get the important stuff, not just the precious metals. Egon, thank you for today and enjoy the rest of the day. Thank you. Bye-bye.
Good to talk to you, Jan. Thanks very much.
Thanks. Bye.